Well, as states struggle with declining revenues, they're competing to attract foreign investment. Joining me to talk about that is Matthew Tuerk, the Vice President for Economic Development and Marketing at Pennsylvania's Lehigh Valley Economic Development Corporation. Welcome to the show.
Thank you.
Now, several U.S. states, as we mentioned, face budget issues. So how do budget shortfalls impact investment outreach and strategy in those states?
Well, states have to adjust their expenditures to meet the budget realities that they face. And that impacts what they do in economic development and attracting new businesses to their regions as destinations. So particularly when it comes to what each state is engaged in with foreign direct investment attraction, they have to adjust the way they approach the effort. That often means not necessarily cutting back on expenditures, but getting more intelligent about the way that they spend, focusing on markets that result in higher levels of foreign direct investment, like China.
So from the outside looking in, how do these foreign governments and companies view the states that have these budget issues?
Well, in our experience here in the Lehigh Valley, the companies are more interested in what's happening at the more local level. So they don't have as much concern with what's happening at a state level as they do in a region. So when we worked to attract Fuling, which is a manufacturer of plastic cutlery for the fast food industry, they were more interested in our assistance when it came to making sure they could navigate local realities and have stability on the local level. That said, I think that companies, when they're considering making an investment in a state, they want to have some level of stability. They want to know what to expect. They want to know that when they make their investment, they will be able to count on working with the same people that brought them there.
Now, in terms of what makes a certain state or a certain region more or less attractive, what are some of the special factors that companies tend to look for?
I think primarily, and this is what I think is very interesting when it comes to attracting foreign direct investment, is that companies are interested in regions. The states don't seem to matter as much to them. So what they look for is what all companies are looking for. They're looking for high-skilled, dependable labor force. They're looking for proximity to markets. They're looking for low cost of operations. It's something that, that is something that our region has to offer, with a close proximity to New York and the ports of New York and the high quality of labor here in the Commonwealth of Pennsylvania. I think that you see across the country.
So then what do the continuous budget deficits that we see from certain states mean for the overall competitiveness of the U.S.?
Well, I think that I was recently at the Select USA Investment Summit hosted by the Department of Commerce in Washington, D.C., and I saw pretty much all of the states exhibiting there, speaking with international investors that were considering investments in the United States. So I think that every state has discovered that they need to look abroad when it comes to attracting investment, and they're being strategic about the way that they do it. I think that each state has identified natural synergies with foreign markets and focused their attentions on those markets, and then within those markets tried to better segment their attraction strategy and talk to the companies that are operating in industries that match the state. So I think what you see when you're looking at what states do is you're seeing them become more, or seeking to be more efficient in those operations.
Now let's look specifically at Chinese investment in the U.S. What are some of the trends you're seeing in terms of the sectors that are really drawing the most investment?
Well, speaking for Pennsylvania, I think the most interest that we're seeing is in the manufacturing sector. High-performance manufacturing is something that attracts interest, at least from Chinese investors. We've recently seen a Chinese company that, like I said, manufactures plastic cutlery, which is not necessarily traditional high-tech, but they are following their customers. I think that's the biggest trend that we see with Chinese investment, is that once the companies that have been most successful making investments in the United States are companies that already have markets here. In general, though, I think there's very good research that's been done by the Rhodium Group out of New York. They do an annual report on U.S. and Chinese FDI. I think it's called Two-Way Streets. Like they reported, and like I've experienced as I've worked in this industry, The bulk of Chinese investment is, at this point, acquisition. So it's Chinese companies making strategic acquisitions of United States operations. It's largely happening in the coast, places like California, New York. It's spreading a little bit to the Midwest and starting to spread to places like Pennsylvania. And it's largely been investor-driven, so not so much state-owned enterprises, but entrepreneurial.
Well, we'll certainly have to see if that trend continues. Thank you so much, Matthew Tuerk from Pennsylvania's Lehigh Valley Economic Development Corporation.